Grab your notepads and get ready for your questions because it's time to introduce the man who is just a master of the markets. There's not just a master of the markets, but a true maestro of money making moves, the one and the only Brandon O'Donnell. Now, Brandon isn't just known for as an average trader, he's our trading enforcer here at Trade the Fund community, known for cracking tough market codes and enforcing winning strategies. He's the guy that you want on your side when the charts get wild. With a trading style as sharp as his wit, Brandon is here to guide you through an intricate dance of position sizing and hunting down that golden profit. So buckle up and get ready for an insightful journey led by your own market mobster. Whether you're looking to refine your strategy or just starting out, Brandon is sure to be your golden ticket to a trading success. So let's give a warm welcome to the man of the hour, the legend in the making, Brandon O'Donnell.
I am truly honored by your great introduction. Really appreciate it. Thank you.
Now don't screw it up.
All right. Sounds good. Sounds good. The one thing that I didn't include in this is a little background. So I basically started trading just about a year ago. And my prior experience is I, at one point, was a fund manager. I co-managed a $100 million fund. That was in 2007, the end of 2007 and 2008. We dismantled the fund, and none of our investors lost any money, which is something to be said. But we didn't make any money either. So, but the good part is we got out. The trader that we had been using single-handedly wiped out Merrill Lynch, the three top firms, because everybody was using him because his returns were crazy, outrageous. I've been in a number of industries, the oil industry, director of investor relations for an oil company. I have built a number of companies myself, to help build companies with other people. The biggest frustration that I've had is that things keep getting messed up by other people. And so I see this as my opportunity to turn things around and be in a position where it doesn't really matter what happens. I don't care if the market goes up. I don't care if the market goes down, and if it's sideways. No matter what, even if they were to outlaw trading in the United States in some way, I can leave the country, go somewhere else, and use the same skills and strategies in any instrument, whether it's commodity, whether it's stocks, bonds, futures. It doesn't matter. And so that's really why I'm here. I did start with apiary. I liked apiary. Have a great deal of respect for Sean. I spent time in going through the process. I'm in gold, I think in gold 2 or gold, I don't have a gold 2 or gold 3. In the process there, I looked at all of the instructors there and really evaluated them before I made a decision. And they're all good people. And I believe they are all experienced and have their own unique abilities and ways to approach the market. But Dave's method and Dave's approach to people, and plus his fantastic marketing ability, really hooked me. And I am very pleased to have made the decision to come over to Trade the Fund and focus on that versus apiary. Not that I'm still involved with apiary, and I'll continue my training there as I go through the process. But the training and experience that I've gotten with Trade the Fund and David over the last year has been pretty phenomenal. That hasn't even been a year; it's been a little less than that. But it's had a huge impact on my trading. And, like David said, I've put the time in, and that's what it takes. It takes screen time. It takes, I was just looking at, I got an email from Amazon about my audiobooks, and I've listened to 200 hours over the last year of audiobooks. And that's what it takes. It takes applying yourself. It takes engaging in what you're doing. It takes focusing on fixing what's wrong, experimenting, and then correcting. And all of those things lead to consistency. And I am just now starting to see a tinge of consistency. And you've seen some, probably seen some pretty phenomenal returns that I've been able to do. Those are not what we're talking about tonight. Those are actually the opposite of what we're talking about tonight. I do a lot of experimentation with my phone account and a lot of things that you cannot and should not do in other places. So the whole focus here tonight is position sizing and how important is it? Well, we kind of have to believe it's quite important. And now a slight commercial, my new magazine that I'm just bringing out, and with the exclusive Trade to Fund new line of muscle cars, we're going to be assembling those in Josh's garage. He's not aware of that yet, but I'm sure he'll be fine with that. The question is, how fast can you really go and maintain your account? You too can have a subscription to this magazine for $200,000 a year. So go ahead and send it to me in Bitcoin. So how fast is the car that you drive? Anybody throw a comment in the chat. How fast does your car go? 120. Pete, 120 in Minnesota? That's a felony.
That's what the number says on the speedometer.
No, he asked how fast
okay.
fast does your car go? So you didn't have to say how fast can it go.
Well, I've been close to 200 myself in one of my old cars, but that was not on the street. That was at an event.
Those crazy.
So the bottom line is, your car can go really, really fast. But yeah, like Pete put in there, how fast do you drive? Well, you drive at or around the speed limit. Why do you do that? Because there is an impact to your future if you drive as fast as you can possibly go. The same is true with your account. If you over leverage your account, at some point, you're going to reach a position where it's going to be too over leveraged in the wrong position and you're going to be toasted. And you don't want to be in that situation. So if you're scared to trade, don't be. Start trading now. I just love this magazine thing. I just threw some pages in here. So safety, psychology. Psychology is really a big factor. We'll be talking, excuse me, about that a little bit tonight. You can't just throw 5 lots on and see what happens. That's irresponsible. And most people wouldn't do that. It'd freak them out, especially on the drawdown. It just would totally freak people out. Lot size is a very personal thing. We're going to talk a little bit about that. We're going to talk about how you arrive at that. And we're going to talk about some training that you can get to better position yourself with that. Layers and zones, that is a fundamental that you really need to have. So I would put it almost on par with position sizing. If you don't have the layers and zones right, even the proper position sizing isn't going to help you in your trading. That you just, maybe you might be able to outlast some big drawdowns and you might be able to make a little bit of money, but it is not going to be a successful equation. So being able to study and identify, the KPIs, being able to make, hey Duke, I've done that before. Misplaced a decimal point, and yeah, Duke just said he put 5 lots on, but yeah, but you've got to be able to identify your KPIs, identify the direction of the market, and be positionally in the correct place and in the correct direction to be able to have success. So your dreams aren't at the end. You'll find your dreams along the road. We have the joy in what we do of getting compensated on a regular basis. You don't have to wait until retirement to be able to make money with trading. You can start now and just continue to build. So you know, the bottom line of practicing, and you do need to be practicing in an account. We'll talk a little bit more about that later here, but practicing doesn't make you perfect. Perfect practice makes you perfect. So when you practice, you've got to practice with the intent and with the focus of building those skills, the skills to perfection. And maybe you won't, and we probably won't ever reach a state of perfection, but you want to push the bar as far as you can and try and get as far along that as you possibly can. And that's why, you know, with me, David mentioned that I've kind of been in hyper growth. My first 6 months, I was either trading or training 16 hours a day. And I put the time in. That's what it takes to accelerate anything that you want to start that's new. So if you're new to trading, anything that you want to start that's new, you've just got to put the time in, and you can accelerate the movement of that big stone that you're trying to push up the hill by putting extra effort in up front. And, you know, not that it's easy for me now, because it's not. I'm dealing with other challenges. I'm dealing with, you know, different challenges, but perfect practice makes perfect. You've got to continue to train and continue to focus. We've got a lot of opportunities here. We've got a lot of good resources, from the free YouTube videos to resources on Discord, and the training courses that Dave has available on the website, and then trading with us on a daily basis. Those are all great resources. So the whole bottom line is that the quest for position sizing. Sometimes we feel like we're in the photo up in the upper right corner there. We're trying to find our way through the maze, and sometimes it's easy street, and we just need to choose if we want to go to the left or the right. But in the end, we want to reach that holy grail where we choose the correct position size at all times and never have to go through a situation where we have massive drawdown, and, you know, unless the market just does something completely out of character, and then, you know, that'll happen once in a while, but that shouldn't be a regular occurrence. So we'll talk about all of these different things. Is there more than one angle to it? How can you be confident in your position sizing strategy? So these are some of the factors. And this comes from Von Tharp's. I think he actually got it from someone else, but, you know, this is a set of numbers that's been thrown around quite a bit. Your system is 10%, meaning if you have a successful system, it's 10% of what you do in your trading. Your psychology is 60%. It's a huge, huge factor. Having a grip on your mental state and not overreacting, not underreacting, but having an appropriate reaction to what occurs is critically important. Position sizing is 30% of that. Now, there's also an impact of position sizing on your psychology. So I would wager and say that, you know, that dark blue section might flip back and forth with the psychology side, because if you're getting in really heavy early on, it's going to way affect your psychology. If you're in too light and you go through a good move and it just isn't worth it, that's going to affect your psychology. So these things are, you know, I spent, you know, after I spent the first 6 months just trying to figure out what was going on, I spent the last 6 months focusing on greatly psychology, trying to get my mental state in a position where I don't overreact, where I don't make bad choices, where I consciously make the right decision. Now, I don't always do that, but that's the focus, is to move toward that. And, you know, I work on that every day. So how is your confidence? When you're a level 1 trader, the market just dictates your confidence. What happens in the market is how you get your confidence. You throw some trades on and have some wins, you've had a great day. You throw some trades on and you lose, it's a terrible day. And as a level 2 trader, the trader dictates the confidence. You start to get a handle on things positionally and start to make the right choices and start to make the right decisions. Then in level 3, you rule the market. Maybe not rule the market, but you start to make really good choices and you have greater consistency. So in level one, it's all about knowing. It's about knowing the number of trades per layer, where your zones and layers and KPIs are, where to use PTP, and remaining consistent with position size, not, and that's something David called me on recently, because I was adjusting my position size as I went through trades, and that's the wrong approach. That creates a situation where you can be over positioned at some point, and then if you get, it flips the other direction, now you're in a world of hurt. So if you stay consistent in that, there's a lot of benefit to it. And then in the lower left-hand corner, if you want to find out more about how to know more about what to do, there's the course. It's called the Fibonacci Trading Secrets, which is also labeled the 3 and 50 course. Level 2 is doing. We talked about that a little bit. This is where you use price cycles effectively. You know and understand price cycles and how they work. You're cognizant of what's happening in price cycles and where you are in the price cycles and the waves. You recognize your early, mid, and late game. How many trades you have in the early, how many trades you have in your mid game, how many trades you have in your late game. You add positions for exits, and you manage your break-even line. So we've talked about that a little bit. David has recently. We're going to talk about that a little bit more. We're going to go through a little exercise that hopefully will help with that process. Learning to fix your trades. Fixing your trades is absolutely critical. As a level 1 trader, you probably don't know how to fix your trades. As a level 2 trader, you're starting to exercise that muscle and get good at fixing your trades. Then in level 3, it's about optimization. In level 2, the hot seat is a great place to exercise those skills. Getting involved in the hot seat and becoming a hot seat trader just helps you accelerate that process. Level 3, optimizing. This is where you become the cool dude in the lower right-hand corner. It's about adjusting position size based upon the market dynamics and the structure of the market. It's about taking advantage of high probability setups. So you really, you may not rule the market, but you're able to more easily pull money out of the market. And, although I'm not a level 3 trader, I've seen glimpses of where I'm in sync with the market. And it's literally a matter of just me looking at it and going, yeah, I'm going to take this. And you literally take money out of the market. It's super, super cool. All right, how I trade. And this is how I trade when I'm trading in accounts that I care about and in accounts that I am working on. Actually, I flip through real quick. I missed some of my notes, but I'll go over this real quick and then I'll hop back a second. And what I mean by that is my prop firm accounts. David's focus is to trade every account the same. There is nothing wrong with doing that, other than he also says we should be trading in a practice account. So I trade very conservatively in accounts that matter. I focus on taking a very small drawdown. I try to risk small in the first iteration. That's so that I preserve my capital, because you want to preserve capital. That's the core of your job as a trader, is to preserve capital. You obviously want to make some money with this, but if you don't preserve your capital, you will not make money. So I try to get the first iteration done, and David talks about we should be at 3 or 4 iterations to get in and out of the market. My first iteration, I try to get 0.6 to 0.8 if I've judged correctly. Now, in the case of this late this morning, I jumped into an account. I judged incorrectly. I ended up in a bigger drawdown than I expected, but I negotiated it right. I think I had a 0.8 drawdown and I ended up 0.7 or something like that, which isn't great, but it's not the worst thing in the world. And I was able to negotiate that and get out of it. And then I stopped trading that account. I'm done. I don't continue to trade. And I find, and I don't know if the rest of you find, maybe you can throw a comment in there. I find that if I push for just a little bit more, if I get greedy, if I go to the 20.25 or I go to whatever my goal is for that account, You know, if it's the second time I'm trading, like I do, you know, one at night and then I do one in the morning. If it's the second time I'm trading that account, I'm going for 0.5. If I go, you know what, this is going really good, I think I'm going to try and get to 0.6. Where do you end up? 0.35, 0.25, 0.15, hopefully not negative. You know, that's what you want to avoid. So this focus of trying to get just to this, you know, with 4 accounts, getting to that 0.25%, it's really magical. I mean, it makes you feel so good to achieve that. And if you get to the point where you can achieve that quickly, it's just refreshing. And then you can go focus on a practice account, or you can grab another group of accounts if you've invested the money to, you know, to have more accounts. So we have, you know, in my case, I've got 0.6 to 0.08, 0.06 to 0.08 on that first iteration. The next iteration, I should be around 0.15. The third iteration, I should be at or near 0.25. It might be 0.20. Now, it depends on what the market and I are looking like. You know, if it's taken me a while to get to that 0.20, I'm going to call it. I'm going to say that's good. You know, Pete and I have this competitive thing going on where we're both trying to outdo each other on the posting. But, you know, if it gets to 0.2 and I end up with 0.8 for the day, that's going to have to be okay. You know, fortunately I've got my lucky phone account that usually trumps everything else, and you know, it knocks me over that 1%. But you know, that's not something that I'm going to continue to do long term. Ideally, you want to be able to do this in 30 to 40 minutes. If you're a level 2 to level 3 trader, you should be able to pull this off in 30 to 40 minutes. Certainly, you need to be able to do it within an hour. If you're spending 2, 3, 4 hours knocking out 0.25%, there's something wrong with your trading. Your understanding of where the KPIs are, your understanding of what the market structure is, your understanding and analysis of the market. There's something wrong, and that's not a you know, backhand or anything. That's just saying, hey, there's something wrong. You need to figure out what it is and fix it, because you should be able to get to a 0.25%. Can I explain the percentages here? Not sure what you mean by that, Mike, but so we trade 4 accounts of whatever size they happen to be. We go for a 0.25% in those 4 accounts, which cumulatively is 1%. So that's hopefully that it doesn't matter whether it's a $5,000 account, $500,000 account, whatever it happens to be. We focus on the percentage, and ideally, if you have 4 accounts, 0.06 and 0.08 is percent. Yeah, I didn't put that in there. Sorry about that. That is a little confusing. So, yeah, my first iteration 0.06% to 0.08%. Second iteration 0.1% to 0.05. Excuse me, 0.15, and then the third iteration 0.25 or 0.2 to 0.25. But thank you for pointing that out. Those iterations are really what I try to do. Percent of gain in the account, Mike. So if you've got a $10,000 account, 1% is $100. So that's what it would be. Yeah, daily return. Thanks, Nick. So back to your question, Logan, are the iterations specifically for prop firms? I would argue that this is a great way to approach whether you're trading your personal account, whether you're trading a prop firm account, whether you've just got demo accounts on. And you know, because with me, I had multiple. At one point I was trading 3 prop firm accounts, but I didn't have my stuff in a group, and when I was really sick, I was not thinking well, and I wiped out all of those accounts. So I'm starting over again. I started with a $50,000 paid account. That is the only account that I've got that's a paid account, that's a real account, and then the other 3 are demos. In fact, I've broken them up. I had a problem the other day and with my copying, and so I'm actually only 2xing right now, and I'll hopefully fix that tomorrow morning. But yeah, don't trade sick. You know, I had COVID, and just wiped me out physically and mentally. I was suffering from so much fatigue. It was unreal. Like literally I would trade for 2 hours in the morning and I would sleep for 5 because it would just wear me out. And and then those 2 hours that I traded were not my best hours. They were not really good. But yeah, the bottom line is this is a good methodology to use regardless of the account. Um, and there may be a situation if you're in a really, um, if you're in an account that has 10 to 1, you may not want to go for 1/4%, at least not up front. David did that last Friday, and that was a pretty rough ride. And it certainly swore me off that. I have a hard enough time doing 40 to 1. So yeah, I don't want to do the 10 to 1. Let's see. I'm going to jump back to my notes here. Some of the things to watch for would be you need to be careful on leverage in your accounts. So if you're trading a demo account with 100 to 1 ratio and you're trading that into a 50 to 1 or a 40 to 1 or a 30 to 1 or a 10 to 1 account, you are going to risk out that other account. So, and not even intentionally, I did that. I kept having these huge losses and I couldn't figure out what was going on. And it was because I was using a demo account with 100 to 1 and my prop firm account, because I was trading gold, was 40 to 1. And I was having these huge drawdowns. I wasn't watching the drawdown on the other account. And it was going to the, like 4.5%. And then one day I clipped 5. And guess what happened? All done. And so, you got to pay attention to that. Alignment of accounts is, that's a good word for it. But, what I do now is all of my accounts are under a 50 to 1 demo account. And if I use restraint with that account and don't get crazy on it, then I'm not going to get myself into trouble. Ideally, you don't want to get in a position where you're 5 price cycles down. That's where you want to be. Hopefully you can dump some on, and we're gonna talk about that in the exercise. You can get some more on and get the heck out of that before it gets that bad. That's a real important thing. Bear with me for just 1 second here. I'm going back through my notes. I wanted to touch on, let's see. Previously, we were talking right here about early, mid, and late game. I wanted to touch on that a little bit. So for me, 6 to 8 trades is my early game because I come in fairly light and I try to keep things well under control in my first iteration. 15 to 20 is my mid game, 30 plus is late game, and at that point I'm an obligation. Now that trade set that I was in this morning, the late morning, I was around 20, 25 trades. So I wasn't nervous. I still had some to go, but I was getting close to the late game. And I really want to try to stay out of that late game to avoid the drawdown. Because once you get into a heavy drawdown, that's when things can go awry for you. That's where things get a little wonky. Now for David, he has a little different higher numbers. He uses 1 to 15 for his first set, 20 to 30, and then 40 to 50. But he adjusts his position size accordingly. So your position size, meaning your lot size that you use for each trade, needs to be adjusted accordingly for that. If you're trading less trades, you can go slightly thicker. If you're going to do a bunch of trades, you want to cut those suckers really thin. And that's David's baselines that he uses with us are really, really good, safe strategy to trade your game. Let's see. I think we covered all that. I'm gonna get on to the next. So we're gonna hop into the challenge next. So I have a little challenge for you guys. I'm gonna ask for some audience involvement on this. Now, hot seaters, for the first slide, I want you guys to stay quiet. This is for everybody else. So this is the next slide here is not for hot seaters. This is fast track folk and anybody else that's on here. So we're going to go through. This is just one that I pulled out from this morning. So starting up here at A, we look at what's happening. We think the market's going to go up because we've got a higher high here and it's been creating higher highs. And yet we have a change happen. So the challenge here is to learn how to add position to your trades to move the break even to a place you can get out with money, not at a loss. And that actually reduces your risk. Thank you, Pete, for muting yourself. So psychologically, we talked about that psychology thing a little bit earlier and how important that is. From a psychological aspect, we have a tendency to not exit if we're in a loss. And that's a fundamental psychological thing that's true no matter what. We hold on to things way too long, and that's just human nature. So we have to fight that human nature and we have to make the right decision. That's why you need a system that's a mechanical system that you follow. You need rules that you follow in order to get out at the right time. But psychologically, we tend to not exit the trades if we're in a loss. But are we okay with exiting a trade if we're at a positive? How many of you are okay with that? Break even? Yeah, I think we're all okay with that. So it's good if we're at a positive. Now we're going to look at, we expect the market to go up. We're at A here. And so we get in at B, we throw some trades on. You get out at C. Who's going to get out at C? You don't know the rest of this. That's to the right. You're so big. Good for you, dude. Is anybody going to get out at C? It might be a pause. It might be a stall. Some of us might. And if you can read the market and react to it, and it stalls up here, you see this wick come up and it starts to get a little jittery, you might get out at that point. You might go, I'm not sure about this, and jump out, pull the plug. So at C, we didn't get out. So now it's at D. We're still not down here, so it's not too bad. It's just a normal market reaction, right? How many of you are sweating it when it gets down here to D? Anybody sweating this? A couple of you? Okay. You shouldn't be, because you're still well within the channel. You're still well within normal price action. Everything's cool. So you should be adding here at D, right? Now, can you get out at E? Who can get out at E at this point? You got in at B. You didn't get out at C. You're in at D. And now you're at E. Is there anybody? Dennis, you could get out at E? How many watts are you using? David can, huh? All right. Yeah, I think most of us, if we're honest, we're not going to be able to get out at E, because we just didn't put enough on down here. We weren't expecting it to not even reach 50%. Yeah, wouldn't be heavy enough, exactly. So now, what happens at F? What occurs at F? Fail. Somebody throw something in the chat. What happens at F? What is this? How about a hot cedar? What's happening at F? What occurs in this candle?
I think you're asking, like, is it expanding?
Well,
It's time.
if we're in a
It's
channel
time.
here,
It's time to
we're
plan
in a
C.
channel,
What are we
F-
looking?
yeah, F actually breaks the channel.
Okay.
So F is breaking out of the channel. There's a change in the structure right here. So this would be a mini KPI, not necessarily a full KPI because it's not necessarily aligned with everything else. But if our channel is going up diagonally and we're seeing higher highs, at F we break out of that. So now at F we have a status change.
I was
So
looking
now
at it as
at
an
G,
M.
it is an M. You're right.
Yeah.
So at G, who's going to be able to get out at H after that big drop? Anybody? David? Probably you could. Some of us would be going, oh crap. And if you got your eye on the 5 minute, maybe you had a better idea. But so at H, most of us are not going to be able to. Most of us are not going to be able to, recognize what the state is at this point and be able to get out. So what do you do at J? We said it in the meeting this morning, late in the meeting. At J, add more on. Yes. So you put more on, hoping that you're going to be able to get out here soon. But
What did you call
happens
us?
if it goes?
What did you just call us?
Yep, move that break even line down. All right. So then it goes back up here. What do you do at K and L? Can anybody tell me what you do at K and L? There's a really, really key thing here. Yeah, Nick, it is. That's exactly what you do. So you add at K and you add at L because now it's pushing up. You're past the 50 on this. It's obviously not past the 50 up here, but you've got, these are equal height here. You're looking at a very good chance that it could push up. So you add more on. You're an obligation, so you can't add. Well, hopefully you can. So if you add on at K and L, and I've been doing this lately, so I've been really working on trying to do this. I actually earlier tonight I took my wife to dinner, and I was trading while I was driving. Don't recommend that, but
how fast did your car go?
I kept it very reasonable. And fortunately, I have lots of safety things on my car. And so I ran into exactly this. And so I saw what was happening. Single digits. 4 digits, Joshua. If you drop it out of an airplane. I did see it. So you add here in these two spots, that increases the probability greatly that you're going to be able to get out at M. Now, if you didn't do that, what's the likelihood you're going to be able to get out from there on out? So this is the next set of, we just went through this right here. This is that double up. So A, it's where you should have been out. Now what happens? What do you do with this? Well, is it forgiving? Now you're heavy and you got this pullback. Oh, pick and pop. Okay. So you could pick and pop here. You can, if you've got enough ability to do it, you can wobble, but pick and pop is the really good choice here. You want to start knocking off and pocketing any money that you can. So hopefully you at least took some on this A, and then you add again down here at B. You know, it's not going all the way down. It's at the 50, fails the 50. It's going back up. What you don't want to do here is at C, you don't want to just wait until it gets way up here. That's like the death knell. Because if you do that, then you're at E, D, E, F, and you know, you could be heavy enough here that you would risk out. You're at least in really bad shape. And if you keep hanging on, what happens out here at M? At M, you're pretty much done. So the previous slide, it's, you know, M is the money move. You go to the next slide, and that's the money gone move. Don't be that guy. So learn to get out of your trades with profit, add enough to get out at the right place above your break even. And this is something that had PTP at A provides. Yes, it would be a bad PTP. You're not buying here. That's just where everything starts in the second set. David mentioned this morning, and I thought it was a really key thing to bring up. You are the only thing that you can control in the market, and you need to be that constant. Everything in the market changes. The price cycles change, the directions change. You need to be the thing that's in control. You need to be the thing that's a constant in your trading. And that's why that position sizing, staying consistent with that size, that's why that's so important. And so I'm going to encourage you to open a separate trading account, just a demo account, whether it's the easiest thing is to go to MetaQuotes and open an account there. And doesn't matter what size it is, 10K is a good size to go with. 5K would be fine. I wouldn't go something less than 5K. So 5 or 10K, whatever you're comfortable with. And practice this, because being able to do this will make a huge difference in your trading. Not only will it help you end the day green, but it'll make your trading less stressful. You know, I did it tonight when I was in my car driving. I don't recommend that, but you know, it wasn't stressful because I'm like, oh, I didn't see that happening. And then so I just waited.
I didn't see that stop sign.
Did not see that coming. And I didn't. I mean, it just was a crazy move. Well, I've got a little prop on for my phone in the middle of the car, so it's positioned in a good place. And Josh mentioned that one thing, you get that one chance. That is so, and thank you for actually mentioning that, because I forgot to mention this. So this C right here, that is a unicorn. That rarely happens. Usually the next candle height is E or G or H. You know, it's lower than this one right here. So usually that very first time is your only chance to get out and be in a good position. That first time. This doesn't usually happen. You don't usually get a second chance. I mean, it happens, but not very often. It's not a common thing. So being able to get out on that first opportunity is really, really important. And then you just wobble. Then it's fun. You know, then we're just waiting for it to go down. Okay, I'll throw a little bit on and wait for it to go up and get out. You know, then we're having fun trading. But if you didn't get out here, this is not going to be fun for you. And it's especially not going to be fun when it gets down to M. So that's pretty much all I have. Any questions from anybody? What would I do if C was lower? I should have gotten out at A, but hopefully I have enough on because we've got some, you know, small pullback here. hopefully I've got enough on to be able to get out at C. If I don't, I'm still getting out at C because C is better than A, and I'm happy with that. Even if I'm at a loss, I'm getting out at C. Between C and I or W for water, yeah. Any other questions? 10K, how much should you look for your profit per day? You should look for 1/4%. What's 1/4% of 10K? We have any mathers in the house? There you go. 1% is 100. So 25 bucks is what you're going for. And if you're using the tools that we have, if you're using it, Anubis, or you're using, you can click on the number and be able to flip that back and forth between dollars and percentage. If you're more comfortable with using dollars, if it's easier for you to track. How did I manage 16 hours a day? I worked my tail off, man. I worked my tail off, and I didn't sleep very much, 4 or 5 hours a night. Yeah, it was not fun. Yeah, sleep when you're dead. I will say that that the factor of me getting enough sleep is really, really important. And that's the one thing that came out of me getting sick, was to determine that the reason that I got sick is because I wasn't getting enough sleep. I was doing 5 hours a night, and I operate best at 9. I don't get 9, but I sure got 9 when I was sick. In fact, for the first couple of days, I was sleeping like between 18 and 22 hours a day. I literally was not getting out of bed. So let's see, how do I manage lot size for my MQ 40K general copies? Okay, so Lee, that might be a better thing to take up with David in the how to fix things day for the fast trackers. But I will say that the copy trading application will automatically adjust for the different size accounts. So it automatically adjusts. The key thing that you have to watch is when you set up your demo account, you don't set up a demo account with 100-to-1 leverage and copy that into an account that has 50-to-1 leverage, because then unless you're really good on managing how many trades you put on, and you're not going to overreact, and end up dumping a whole bunch on and then getting in a bad position. So that's the key thing, is set up your account, because you can choose the leverage when you set up your MetaQuotes account. You choose the leverage that you have for that account, just like you choose the size. Fancy Merc guys getting fancy sleep. Yeah, and Duke, Duke, you don't need much sleep, you said, and that's different. I forget what that's called. Where you don't need much sleep.
Zombie.
Zombie, yeah.
Married.
Married. Married. No, it's called Married with Kids. Dolphin. Yeah, that's right. Dolphin. I forget what I am. But yeah, definitely, Lee, take a look at that, and maybe just even set up. I mean, it doesn't cost you anything. Set up a different account. Figure out what the leverage. I think FDMO is 50-to-1.
Yeah, the trade copier kind of manages that for you, so you don't really need to. You just need to worry about your parent account. You don't need to worry about position size for all the sub accounts.
Yeah.
So
yeah.
We wouldn't need to worry about that.
So just the leverage is the key thing. So size the account that you trade with for whatever you're comfortable with, whether that's 10,000 or 50 or whatever it happens to be. Then make sure that you pick the right leverage for what you're copying into. Those are the really critical factors.
So Brandon, do you mind if I throw a couple questions at you? I
No,
really
no.
enjoyed your presentation, by the way. So it's very well done. So appreciate it. And I can tell you put a lot of time and energy and effort into it. So again, appreciate that.
You're welcome.
And one of your slides, you brought up the concept, or you mentioned about the 3 levels of trading. You know, the level 1, knowing, doing, and optimizing. You
Yeah.
kind of also referenced in that about how somebody could kind of self-correct, or if you're not hitting X, there's probably something wrong with your trading, or you probably need to go back to the drawing board. But what would you say to recommend to somebody that that is looking at progressing, right? Like if they wanted to self-assess themselves and say, okay, I'm a level 1 at this, or I'm a level 2 at this, or I'm a level 3. What are some things that you have done that kind of help to recognize how you kind of move yourself up in the levels? Does that make sense?
Oh, that's a really easy answer. Yeah, so you just become a hot seater, and then David dolls you when you do stupid stuff. Um, uh, it's come through.
That's the lazy answer.
Well,
Just let somebody else tell you.
As our trader Jeff this morning said, I prefer to learn from other people's experience. That's why I got in this, so that I didn't have to figure it all out by myself. And I absolutely, and seriously, I want to speak to that. I have recognized for a long time, when I had my payment processing company, I used a business coach. I had no idea how much value that would bring me. He didn't know anything about running a payment processing company, but he knew a heck of a lot about running a business. And one of the biggest things that he helped me with was time management, how to manage my time better, how to focus and make sure that things get done. And when I became a notary signing agent, which is what I did after Trump wiped out my payment processing company. When I became a signing agent, I looked around and I found the top notary coach in the country, and I paid him to teach me how to be a top signing agent. And I was a top signing agent in the South Bay area. I went from nowhere to in the top 150 notaries in the South Bay in months. Now I did that. I did put the time in. I was doing 3, 4, 5 signings a day, which is crazy. But it takes the willingness to search out the information, to find and be willing to pay for what you need to get to the next level, because it's gonna be worth it. I would hope that nobody here would be in a state of mind where they don't feel like money that they put in today is going to bring them exponential money in the future. I hope that nobody is, because that's what I do. I expect every dime, every penny, every Benjamin that I throw at what I'm doing, I expect it to return, to yield major return in the future. So that fundamentally, that I'd say that's a foundation block, David, is you've got to be willing to recognize that it's worth spending the money to be able to get the help that you need to get to the next level. Now, whatever that next level is, that doesn't mean that the next level for you individually is a level 3 trader. But becoming a level 2 trader, or even a very good level 1 trader, if you're not there, can be huge. And getting to be a good level 1 trader will give you greater confidence, encouragement, and the ability to want and think you can be a level 2 trader. And the same thing when you're in level 2, when you start to do things right, it makes you go, this level 3 isn't really that far. Um, how soon did I join Hot Seat? I think I joined pretty quickly. And the reason that I did that is because I really wanted to be in the David, what was the crew called that you were in? The Wobble Crew.
5 to 50, or
No, the
when they did
the
the wobble crew.
the
Yeah,
Wobble
yeah.
Crew. I really
Long time
wanted to
ago,
be in
yeah.
that, but I was having a hard time scraping up the cash to pull it off. And so when you started Trade the Fund, I'm like, and I'm gonna get to trade with him on a fairly regular basis. Yeah, I'm in for that. So that's why I did that. And so I did it fairly early on. You know, that it was fairly early.
Yeah,
Um,
it's kind of a cool journey. I think less than like 3 months into you deciding I want to be a trader, you found us and went into the hot seat. Do you know what
well,
I
and
mean?
I don't think that I mentioned the other thing that I did. So in between, when our current president wiped out my notary business because of the crazy interest rates, I spent $25,000 of money that I didn't have. I financed a course in how to make money on short-term rentals. And it was not until I went to one of the courses that Apiary taught risk management that I recognized that I made a very, very like horrible mistake. We're in an environment where interest rates are going up. I'm out there putting my neck on the line, renting houses to rent out for nightly rentals. And we're at a point where things could turn around and people could not be able to make their house payments, lose their house, it goes back to the bank. And I'm still under contract to rent that out and pay for it. And nobody's traveling because they don't have any money. So once I recognized that, I literally shelved everything immediately. I'm still paying for it, but I shelved everything immediately. And I went, okay, this trading thing looks like I've always wanted to be a trader. I mean, I was a registered representative back in the 1980s. So actually,
But
80s or 90s. But
it's also something, I mean, it's also something that nobody can take away from you once you know the skill. Do you know what I mean? You can't get shut down,
absolutely.
right?
Yeah,
And so
absolutely.
that's to me, that was a strong value because I've been in situations where beyond your control, like you said, politics
Yeah.
change or somebody above you makes a bad decision,
Yeah.
beyond your control, you have to make a life change, a change in your life and go, what am I going to do now? And I think a lot of us to say, I don't want to be in that position ever again. And that's what trading allows us to have, is that skill set to never have to rely on somebody else making bad decisions. We can do it for ourselves.
Yeah. And
That
the course
that
that
is
I bought,
that is
that,
the
that
only reason why I'm here, guys. This is the same situation for most of us, that we don't want to be in the
yeah,
situation where we are coming out of.
yeah,
For
and
sure.
I don't consider that $25,000 money that I've thrown away. It's a good business. It's a rocking business. It's just bad timing.
Sure.
There'll be another time when it'll be a good business to be in, but for
Yeah.
now,
Pay,
no.
let's pay for it first and then go back and
Yeah.
do it. Right.
Yeah, that's not
So I got a couple
not
more
a
questions for you, if
not
you
my
don't
short list.
mind.
No,
So
not at all.
I also love that you brought up psychology is huge. And I personally didn't believe, I'm not a big psychology person when I started trading. I didn't know how much of a hurdle that was going to be on me. Right. And in today's hot seat session, I probably have projected a lot of that into our brand new hot seater, because I could see him going down the same path that I did. And so I was like, no,
Yeah.
don't do it. It's not good. It's because it literally I had to break down my psychology faux pas or whatever, thinking and understand, hey, it really does kick you in the butt if you especially if you don't don't understand that it's there. So I appreciate you bringing that up. And position size really has a lot to do with psychology. Really, really does. And because if you're too heavy and you're down, you're stressed and you're freaking out and you're making bad decisions. And if you're up by a lot, you're not stressed, but you're still not making good decisions because you're like, "Ooh, should I get out? I'm going to get out." And then you're like, "Oh, why did I get out?" And so learning how to curb that psychology and learning how to um uh really take and look for what the market gives you. How have you kind of how has learning that helped you to become more of a consistent trader? Because I think psychology and consistency go hand in hand, right? The less or the more stressful you are, the less consistent you'll be, right? So what are some
I would
things you've
agree
done
with
to kind of
that.
handle that? Yeah, go ahead.
Yeah, I would agree with that, but it's more than just psychology. It takes being willing to follow your rules, and it
Mhm.
takes discipline.
To trust the
Um,
process, right?
yeah, so being mechanical in your trading, and I'm historically I'm the guy that has a level head when things go awry. That is one of the things that God has graced me with, is the ability to make good decisions in harsh environments. Um, and so I've got a little bit of an edge there, maybe, but it still has impacted me. When I traded a $200,000 account early on, and I saw the huge drawdown, it had an impact on me. And actually, one of the challenge accounts that I bought was a $200,000 account, because I'm like, I want to get to 500,000. I need two $500,000 accounts, and I was being aggressive and I was moving toward it, and then I saw the drawdown, and I'm like, oh my gosh, $14,000. And it wasn't even anything. So, but what it takes, and now today, I'm not trading a $200,000 account, but I trade a $100,000 account regularly. Doesn't bother me in the least. I don't even, it's, I mean, I would say that to me, it's really the same as trading a $10,000 account. In fact, I'd rather trade the 100, I think.
Yeah, no,
Um,
I get it. It's like you have to find your comfort zone with the amount of what you trade. And some
well,
people
it's really
y-
more than that. It's about being mechanical
yeah,
and being,
with-
making the right decisions. The result will come if you follow the process, and if you maintain discipline, and
yep.
you don't scrimp on things. You don't
Well,
go, oh, well, just this once.
well, it goes back to the comment that you made that I really loved, and I wrote it down. I think you said in a market of inconsistency, we need to be the constant,
Well,
right?
you said that.
And well, that's probably why I love it. But I
Pretty
was
sure
going to
you
give
said
you
that. Maybe
kudos
that's
for it.
maybe that's what I
Yeah.
understood from what you said. But yeah,
But it really is, in a market of inconsistency, we need to be the constant, right?
sure.
And so how do you maintain a mindset of consistency, especially during a turbulent market condition?
Discipline.
So how does position size
Having
help you to be disciplined?
Because if I'm sized correctly, I have no reason to be worried. And that enables me to have good discipline.
I love that statement too. If I'm sized correctly, I have no reason to be worried. I love that.
Yeah. I mean, you know, I in my in the apiary fund account, the pre-fund account this morning, I I traded heavier than I should have, just because I was watching and following along with everybody. I wasn't really thinking about it, and I did 4 trades per layer, and that was more than I should have. I should have only done 3. because it got me really close. If it had dropped, two more price cycles, I'd have been out of, I'd have been in a potentially bad position.
Sure.
But, having the discipline, not overreacting to the situation, realizing that it just did something that I was not expecting, but I'm still fine because I have the position size to be able to maintain. And, unless it gets really crazy, it's all going to be fine. And sure enough, I did quite well. It did almost 100% retracement. So, not having the discipline to follow your rules is really what it's about. I mean, you have to have good rules. You have to have a system that works, and you have to have good rules. And as long as you do that, then it takes, I actually, last night and this morning, I had fun trading. And it wasn't
For
just
the
because
first
I was
time.
making,
Congratulations.
no, I've often had fun.
Kidding.
The day that I made whatever it was, 34.5%, I think, that day wasn't so
That-
much fun. It was exciting, but it was not just fun.
I love it. Well, again appreciate you putting this together. The last question I have for you, in case unless anybody else has, is like, reflecting on last week, we got together and we went over position size. So we had a class that was dedicated for position size for you. And from that class and the experience that you just had in developing this presentation, were there any specific insights or feedback from this last week of preparation that that you've gained or that you've gleaned that you've incorporated in this, or that you will take away from and put into your future trading?
Yeah, I think the biggest factor that was exactly what I just explained, the discipline.
The discipline.
Because
And you're seeing it take shape,
experiencing
right?
that, yeah, experiencing that, because I've got the pressure of doing the class. The last thing I want to do is risk out right before I do my class. So I'm having good discipline because of that.
Holding yourself accountable.
Look,
Yeah.
oh, look, it's not that bad. Now, that's
Yeah.
not to say, I mean, Friday last week, I did fantastic with the XAU, and I flipped over to the Euro. I lost 3% on 2 accounts. One of those was my TFT account. And that sucked because it's a different
Position
animal.
size.
And maybe it was, yeah, it probably had an impact on things. I didn't have it together, and I couldn't see the market well. It acts differently. And some days I'm okay with jumping back and forth between the two, but the Friday I wasn't. I mean, and it seemed like it was doing things that were just nuts. Well, you traded it.
Did.
And I was in too heavy for sure, because it shouldn't have been 3%. It should have been 1. But I've made all that back almost. I'm $500 short on my TFT account to, back to where I was.
Awesome.
Yeah,
Good.
and I may come up with that tomorrow. We'll see. But yeah, but the discipline is really I think the core thing, and because it's hard to put. It's easy to say, oh, you need to use self-discipline, but unless you can wrap your head around what does that mean, what is that for me in this situation, because I have, like, in dealing with other people in business and dealing with friendships and dealing with business relationships, I have integrity and people know me for my integrity. But when it comes to self-discipline in trading, it's real easy for me to fudge on that. There's nobody but me that's going to hold me accountable. Well, sometimes you do with a doll, but I mean, but so that discipline thing is really the core.
And it's the psychology of it all, right?
Well, yeah, being able to see it all and put it all together. So I feel like that's kind of what's happened over the last few days is it's it's enabled me to assemble the pieces together into a unified thing.
Logan has a question really quick that I'd like to know too, is like when you put in 16 hours a day, which is, um, I would want to say it's crazy, but I've done that too. And there's a time there's a time in your trading, and you certainly are in this time of your trading when you need time and seat, right? And when you're starting out and you're in your first year of trading, you need time and seat.
Yeah.
And I really do subscribe to the 10,000 hour rule, but as you get that time, there is such a thing as over trading. So just
Yeah.
you got to find that balance for sure, right?
Absolutely. Yeah.
But when you were pumping in those hours, the question is, were you in a simulator all day, or I mean, what would or
No,
were
I've
you
used a
live at?
simulator like maybe twice.
Yeah, I
It was
never
live
have either,
markets.
but
Yeah,
yeah,
it's live
'cause
markets, and I don't take that wrong. I'm not saying there's anything wrong with using a simulator. In fact, like Duke does it, and he does it at faster speed. That I think would benefit me, and that's honestly that I think is David. When we traded together, you would often say to me, "You need to read and react. You need to
right.
act faster." I wasn't able to do that. But now that I've traded gold, because it moves very, very quickly, I am more able to recognize things and see what's happening with each individual candle and see when it's jittering as it gets to the top and whether or not it's going to, if it's likely to reverse and to close the trades, if if it looks like it's going to stall. I can do that now, whereas I couldn't do that 6 months ago because I couldn't see it.
I think
So
we're gonna edit
refining
that
those
part out.
skills. Well,
And you're trading
refining
gold the part.
No, no, but that's because I haven't used a simulator. And you can fast forward on a simulator and do, twice as fast, 4 times as fast. You can do, I mean, you have that ability to tune it to whatever the maximum capability that you have is. And and I actually have been toying a little bit with TradingView and watching even the tick chart. um, I, that's interesting to me. I'm not at a point where I'm all in on doing that, but I can see how that could maybe provide some additional insight
Yeah, no, I
into
could
what's
see how,
happening with the
yeah,
candles.
simulators, yeah, for sure. Like,
Yeah.
if you know the market, like I said the other day, like the best thing to do if you want to learn how to trade news is trade it in a simulated account, right? Because news you have to fire and you have to be really quick and do it in a simulated environment, right? Josh Hunter says, I
Yeah, Josh has got a good
apologize.
question. Yeah.
No, he says, I
Um,
apologize. I apologize. I was late. That's all he said.
no, he
So
said more
That was the
thanks.
important part.
I accept the apology.
I'm just kidding. He
So
says, did you let me read the question for
yeah, go ahead.
for recording people who are
Yeah.
recording. He said, did you discover how to reassess in real time that you may have misjudged correct sizing or the market changed and you need to adjust mid trade, but the market hasn't given you the opportunity yet? Did you find your way to recognize that trigger? And if so, how to manage it?
I have not, but uh I have recently a couple of times been in that situation. And fortunately the market has been such that I've been able to get out and then reassess and adjust. But um no, that's a very good question to have, and it's something that I have experienced twice in the last week. So it's something that you know maybe we need to figure out a solution for.
You
I
don't
don't know
say
exactly what that
twice.
is.
Me too.
David, didn't you
Oh,
allude to that earlier today? Uh, when if you're not going towards your target and your movement is twice uh, the size of your target, you should work for getting out.
yeah,
Oh, I
I
think
guess that's true. Yeah,
you're talking about if your drawdown is twice what you're trying to receive. Yeah, I mean, that was from an overall trading aspect, is that was the goal I was giving him, is like, if you're going for a quarter, try to do that without risking a half, right? And
Yeah,
that's a
yeah.
challenge. It's really a challenge, and it's not something that you can do every single day, because the market's going to throw you curveballs, right?
Yeah,
But you can be consistent at it, but some days you're going to have to learn how. That's why we have win, will, losing. We have pick and pop. We have all these things that when the market doesn't go your direction, you need to turn to help you. You know what I mean? But
Yeah.
But when you start and go into the fix it mode, you should concentrate maybe more on where to get out. And
yeah,
it's like you were
definitely
like,
go to obligation mode, right?
yeah, what you were saying, well, you've been taking trades to get out at this point.
Yep.
That kind of move.
Yeah.
When do you, that's, to me, that's what the crux of Josh's question are, because you're moving into something, you're wrong. And so now, instead of trading for profit, you're trading not to go over your double your daily loss.
Yeah, and you have to thank you, Joseph. That's a great question. You have to really watch that 50% thing. You got to make sure that it's not passing that 50% and you're just throwing on more weight because you think it's going up. If it's got to fail to 50% for you to be in a position where you can put more on. If it doesn't fail that 50%, you shouldn't be putting more on, because you're just adding to your risk if you do that. And and that takes fast thinking and fast action. So Josh, to your point, I guess that's the closest that I've been able to address that, is the just it's tough to move and think that fast. Now I on my phone I can do that because trades execute super fast on that.
Yeah,
and I've
and
got go ahead.
sorry, I thought you were done. The only thing that I have figured out, and I was hoping maybe we could figure out something now that we brought it to light and you've had your presentation, and something we can put in our heads, is to stay light, to manage that when it occurs. And I most often experience it like when New York opens. I'm trading one market, and then New York opens, you have a very different market like within the minute. And if you're mid trade, you've got this balancing act you got to do to catch up to New York. Trading light is the only way I figured out to mitigate that kind of problem. But unless like when New York's opening, or unless when that market change is going to occur.
That's the other thing, is to make sure you track that.
I'll tell you,
I have notifications on my phone for some stuff, but absolutely.
I'll give you 3 things that'll help you. 3 things that'll help you, Josh. You want to know what they are?
Don't go let your dog out. What are they?
The 3 most important things.
The 3 most important things. Exactly. I was gonna do that. Now I can't do that. Is 1, PTP, 2, position size, and 3, KPI. You nail those things down and you have your answer. And if you fell at one of those, you need to be good enough to recognize which one it was.
I see your point.
If if you can read, react, and resolve the market with those 3 things: proper position size, proper trade placement, and the KPI, the key price in the indicator, it will help you to be consistent day in and day out and recognize when the market has shifted. So those are the 3 things that if you don't have nailed down to a read and react type of thing, that's what you should be working on, right? And so even though Nick didn't show up at his own class last week, I still love that you held a class on recognizing KPI, Nick. So way to have that class. And then
you should check it out. There's this bird and there's this thing that we found.
No,
I'll just leave that for the class.
There's people that want to go watch it again.
There's one other thing that I like doing, and it's not that it's going to actually work every time, but when I look at the news releases, the structure of the news releases sometimes will give you where it should go. and when it releases, you know, what the strength of that direction should be. Not that it'll go there, but I'd like to have that in the back of my mind.
But I really do believe that those three things every trader should master. And if you can master that, and position size is one of those, and that's what we talked about tonight. Position size, PTP, which is going to be next week, and KPIs, which we've already done. But you can't do enough of those, and because that's probably one of the harder ones out of the three. But if you can have that down as a foundation and just nail it, it will help you to fix any situation that you encounter, and also just avoid it because you recognize that you shouldn't be trading it, or you should trade it, right? Get in the right direction. So, any last questions before we kind of call? We kind of went over, but hey, Brandon, very well put together. Great presentation. And I think we all have learned a little, and some of us have learned a lot. Any last questions before we call it quits, guys? And if not, then it's bedtime for some of us, especially Brandon. We've kept him up way past his bedtime. So
Great work, Brandon.
Thank you very much.
For those of you guys who are past your bedtime, I'm still going to see you guys bright and early in the morning. So, get excited. We are going to be doing another fast track, hot seat session tomorrow. So we're excited about that. And then we have the early hot seat class tomorrow for hot seaters, and, we'll do that. And then we will see you guys in the AM. Thanks, guys.
Great team, Brandon.
Thank you.
Like the driving. Take care.